And anyone involved in warfare, the sniper, has to be the most patient of anyone out there. He can wait for hours and days to take aim at his target. So we have the market sniper with us today, Francis Hunt. Francis, great to see you again. Good to talk to you again. I always look forward to our conversations and batting the financial badminton birdie around. So thank you so much for coming back and joining us today.
Always delighted to be with you, and thank you for the invite, Dale.
So the big story is really what's happened with gold and silver. And the sub story has been silver's outperformance vis-a-vis the gold silver ratio has collapsed. And I know that you've been all over the metals, and you're telling stackers keep the faith even when there are corrections in the market, which we might be in the middle of or getting ready for. Tell us what you're seeing technically and fundamentally in both gold and silver, and if this has legs going into, say, the rest of the year and maybe even longer than that.
That's a great question, and I do indeed have an opinion for you. I'll start with the gold-silver ratio that you alluded to, Dale.
Yeah.
A key technical event definitely took place for us
Yes.
on the breakdown out of this weak grinding upward channel. And we've referred to this dashed red line. I think I might have referenced it in an event with yourself. I don't stop jabbering about it on my own channel. And our expectation is that this was going to break to the downside and that it would be disorderly once it did so. And we gave just two levels that would be the next stopping points. We said there's a soft floor at 75, but your neckline at 65, you're going to get there in a disorderly, quick manner. I'd argue that so far we're on schedule because we had the rally, as you usually got,
Yeah.
off the basing ascending grind line so many times where it was retained in range. But this time we only got to the halfway mark. We call it our splitter in a channel. And literally you've dropped from around 88. You had a soft bounce at 75. It didn't hold for long, and you've been making new lows throughout the day. So this is a silver overperformance point that you
Yes.
made. And this is actually very good generally for precious metals, although the gold has looked a slightly bit more stale recently. It's generally a very good thing for all the precious metals. And I'd like to suggest the movement from 73, which is where we are now, to 65 is still part of that fairly abrupt decline. That doesn't mean you don't get a little bit of pushback along the way, but generally, if you look at that line of efficiency, that descent, it's going to be a steep one, Dale, because you've
Okay.
been exhausting in staying in this channel. All these little buy-ups that have kept the channel alive is pre-exhaustion. So what then happens when it goes big, because the ability to hold the silver down in its relative performance to gold is no longer there, and you get what we call a capitulation stage. And that's the most interesting point in time, and we've been very aggressively long in the silver market. So I think
Okay.
maybe that's point number one. There was other parts to your question, if you want to repeat that you'd
No,
like me to drill down.
I just want to interject something because I've been in the markets a while, just like you, Francis, and it's almost like a reversion to the mean trade because I started in the 70s and we really were around 40 or 50 forever in the gold silver ratio before we, started to trade up towards 100. So, yeah, I could see your armpit. We're probably going to take out that armpit, but eventually, say we're at 50. Does that translate into big round numbers, 3,000 gold and $60 silver?
I think it could come sooner. I think gold can't be too sleepy for too much longer. It's a bit slower on the gold front. But, we went from 2000 being a technical resistance. Yes, we
Yeah,
traded on a monthly level once or twice above, three times, as we said, and the
yeah,
fourth time is your lady. We broke, and then it turned to support. And then next thing you knew, we were 2,400s. So, we put on $400 on what was a long-standing resistance since
yeah.
2021.
Right.
So you can put on another $400 equally fast. And I won't promise you that just in the journey from this capitulation from here down to 65 that you'll necessarily be all the way there. But I would expect a little bit of an overshoot to this target before you get repelled back up. So you could be
Okay.
down at 60, 61, and I would expect gold to have made some headway to the upside in that. But the biggest, obviously by definition, the biggest beneficiary is silver, and that 45 to 50 gateway. We've got a third visit, a date with destiny. A third time is needed for that range. And I think that's going to be a key resistance point. And unlike being just everything super bullish, I do think we get sold off when we get to the 45.50 again on silver one more time. So I'll just show you that as part of answering that question just more thoroughly, if you'll allow me. Because this technical chart never ceases to amaze me. I'll take some of the lines and the draws off, but that's your 79.81 era high, the first one. That
Right.
was the last end of a real bull surge. We had a truncated bull that brought us to the 45.50 in 2011, and literally the move to 2000 recently off COVID. This is just minor rallies when you're looking at a quarterly chart, which is a 3-month
Right.
chart I brought up. So those that like technical analysis will often say, well, there's your cup and handle straight away. We like the ascending structure, the ascending triangle structure almost more
Okay.
in that case. We're like this,
Yeah.
and the target suggested by all of that is epic. And for those that are feeling, I want to encourage people because it's difficult times. There's a recession out there, in my opinion, and has been for a long time. When the data first yielded it, for that matter. But for those that are holding gold and silver or thinking of getting in it, even making little $50 a month or a week purchases into the likes of gold and silver and accumulating and stacking small time, you're really early in this game. I mean, we love to be early and we're super early, but even if you started today, you're still really early in what I expect to come, because the breaking of this 45.50 level, when it happens, as I'm suggesting, I think we'll get there, but then we'll dip down. But the dip down, I don't expect to be long. The gaps between each one is ever shorter. We've gone from
Yes.
81 to 2011 as that's the better part of 20, 30, 32 years, to a much shorter cycle to the localized high here, to an ever shorter cycle to here. And I think the pullback, it'll feel long if you're watching it day for day, but in a couple of weeks, maybe a month, you'll be over. And then the biggest move of them all will be this move off from the 50 mark, because then silver is unhinged and in new territory, Dale. And one final little detail that I will throw in just to further develop that point. You've got to remember inflation has been going crazy. And if we adjust all of this for the inflation rate, just to further make the point, this is Bureau of Labor stats, and you can make whatever you want of their statistics. I think they understate grossly. But this is just to make the case of how far behind we
It's
are.
an
Just to
identical
me,
chart. Oh, okay. That's still the silver chart up there.
that's still the silver, but this time I've divided it by the CPI stats. So where
Okay.
inflation and the cost and the buying power of the dollar was in the 80s, that's your multiple up top there. And as you can see, it's around 0.6. Right now, you're at about 1/6 of that relative
Okay.
value to the multiple. So in terms of bullishness at the peak of the 80s, you're not even, you're
No.
barely past 12.5%. And this is a technical structure of its own with, localized highs that are all looking to fall as well. And we love a good squeeze. Volatility trading is our game. It's great for option traders as well. This is the beginning of a strong move that we anticipate that shoe will fall in the break, that will fall, and we actually expect the overshoot to overreact to that will substantially dwarf even the 80s move. So we're talking, 330 as some of the targets we're gonna be taking out on silver. So it's really bullish, and these are technical levels. I don't just suck numbers. They're geometrically delivered by pattern trades on log scale, macro quarterly charts. And actually, the higher the time frame you go up, I find the more predictable and the more compliance you get. So if you think pattern trading works on a low time frame, you should be balancing those probabilities and potential possibilities of being accurate on the bigger time frames upside.
Some great looks there, Francis. I think uh, a lot of people are ignoring the white stuff, the other white stuff, platinum, palladium. I was taught the white stuff leads. It's definitely it did in silver. And I believe you and I remember when platinum traded at a premium to gold rather than a discount. So I started talking that trade up about a month ago. But just long platinum itself has been a real nice trade for about $1,000 in a month.
I think
Your
it's a
view
good
on
call.
those? Your view
It's
on
a very
those?
good call. Yeah,
Okay.
I think you're right. So we also, so there was a bit of an industrial dynamic, even though they're very precious, palladium and platinum, but there was a bit of a trading one for the other that did for platinum very badly and pumped palladium quite strongly. And that is, of course, the EV news. And we're starting
Right.
to get a bit of a blowback on EV narratives. And, you just have to think of the Porsche Taycan selling for about a third of what you paid for them a year and a half ago, and people having a little bit more of a how fast is the battery grid really getting developed, and et cetera, et cetera. Anyway, so we're certainly seeing that unwind a little bit. And I think platinum, if you look at its relative valuations to gold, it's reacted violently when it's usually this oversold. So the
Yeah.
chart to share on that one would be, for example, platinum divided by gold, which I'm happy
Right.
to pull up for you as well, which will illustrate just historically with and I've got a certain amount of history. I haven't got all the history I'd like, but like you, I was brought up with platinum being up to 2.5 times more valuable
Yeah.
most of the time. I had a brother who's 10 years my senior who was a geostatistician for the mines. And he was telling me, you're about 1/30th of the amount of platinum above ground that you have gold. So that is one hell
Yeah.
of a unique and very rare metal. And that was in South Africa as well, which is one of the main producers, and Russia the other. So you're
Yeah.
also talking about two sort of on the fringe
So,
nations. It's not mainstream. It's not Canada. It's not the US that is bringing platinum to the market. So in terms of scarcity and rarity, I'd love to have more platinum jewelry.
and
And I think
supply
these valuations,
disruptions
yeah,
and
exactly,
potential
plenty.
supply disruptions. Yes. Okay. So, has the chart come up?
Yes, let's show you
Great.
that
Very good.
relative valuation just to
Look at
highlight
that.
the differential. Now we've only got since '98. I would have loved to have had a bit more history. Let me put it on monthly and take it off quarterly. But you can see that this has been a
Yeah.
big, big unwind
Yeah.
of relative valuation, and we've got a bit of a double bottom going on here. So at
Right.
these highs, I would say you're probably looking at platinum looking relatively overvalued. So I tend to do what I call a tops and tailing. I'd say you might change some of your platinum for gold at these levels and
I
draw a
see.
line like that. And I
Okay.
would say you want to change some of your gold for platinum down at these levels, and that would be roundabout while it's half, because it's far rarer metal. And let me just get that line drawn in there. Around about half is down here, and that's how I tend to do when I have very big macro charts and I'm doing cross market analysis. And you can even throw a midpoint in. Let's just go with the orange and say, well, we're roughly between 2.5. That's about 150 divided by 1 at 75. So it's about 125 as your midpoint. I've got a log scale chart on here. That's why it's going to look a little bit skew.
So this is
Because
embryonic. We've only had one quarter that's not completed. If this is a quarterly, it's a
it's a
monthly.
monthly.
All right. And, I do a two candle reversal system on weeklies for macro signals. And so if you just count back two signals, if we finish the month, which is almost over, you have a 2 week reversal because we're closing above the prior, not just last month, the month before. That's a 2 month reversal as we speak
Off a
going into
secular
the end of the
low,
week.
which was a reversal before as well.
Yeah, yeah.
So you
So
actually have the double bottom on your team as well on
yeah,
that, Dale. And you're
not
in the hyper
exploited.
undervalued
Yeah,
zone as
not
well.
So we're not exploited yet. And, those are the kind of things I look for. Nat Gas did the same thing. But, you can't talk about metals, Francis, without a discussion on the dollar and yields. And I'll admit, I was looking for a correction while the dollar was rallying to 106 and a half. And I could understand how gold could rally with the dollar being firm up to 106 and a half, but the silver actually performed pretty good during that time frame. And it normally takes a bear market in the dollar to have a bull market in silver. What's your take on the dollar here, Francis? It's, I think, a fairly crowded trade on the long side right now.
Yes. So when you ask for a take on the dollar, I have to fragment it into time frames. And if I was talking on the weekly to monthly, we've spoken of this being a bit of a watermelon smile. So this is what we call the rounding bottom. So
Okay.
remember that who we're measuring the dollar against, though. We're
Yes.
measuring it against other failing fiat currencies.
Right.
So, this points to a bit of bottoming, and we like to split it in half. There's your toothy grin, and that's kind of just having a bit of fun. But we had a blow off strength. We had quite a harsh correction. You traded through the 100 on the Dixie on that dip, and that was rejected violently. You came down because of the
Right.
rally being so strong, a bit of a counter move. You failed to make a new low, and you actually are in higher highs, higher lows at the moment. So that's on the weekly time frame. However, within that, more recently, we have had this period, which we've called short medium term. So on the dailies, we've actually been referring to the dollar being a bit softer. So we were expecting a bit of a downside move out of it coming here when after this rally period. And you had the news of the let me just turn the lights on again with the lines we've drawn. You had the news of the CPI numbers coming in under. So when we had this little channel, we expected a bit of a down move. You can see that's being back down to our 104 key level. And right now, you're actually having quite a perky move
Yeah.
to the upside. But generally, since the beginning of May, it's been a broadly down chart, broadly
Yes.
down short-term time frame. But remember, again, as I keep reiterating, this is measuring against other failing fiats. The euro, the Swiss franc, the euro is 53% of this, the Swiss
Right.
franc, the British pound, and the Japanese yen, which we don't have to say too much about as a peer. So overall, I want to highlight this is get your thinking right. We're comparing a group of fiats and debt systems in a sort of rubber bladder that has been hyperinflated and the air is being let out. This is what sometimes frustrates me with the milkshake guys. You brag about the dollar doing well against the yen. Well, because the dollar's done well, it's on the back of rates hikes, and that means your debt market has collapsed more. And what we've actually had is the 30 years. I want to show this chart. I show to anybody who'll listen. This is the most recent 30 years behavior. So
Yeah.
you want to brag about the strength of the dollar on rate hikes. Well, what's that done for your debt valuations and all the people that hold your debt? Surprise, surprise, China's sold a net distributor on a very large scale this first quarter of this year of debt. Well, that's a 45% loss represented right there on the 30-year treasury. And
Right.
the other interesting point I'll make out of
That's the
this,
most severe bear market we see in the chart.
and Bank of America that created this chart is saying it's all going to go great and rally now and be stronger. And I'm in the exact opposite camp. Yes, you can get bounces and rallies, and they can even be sometimes a bit vicious. But the longer way journey for me is I think you return and you can overshoot to this level to when you first started going parabolic. And that point, Dale, this brings us back to the metals argument, was peak 81 metals
Yeah.
boom. The minute they tamed the gold bull market and brought it under heel, and we got the free float Nixon agenda of 1971 properly established, and it took a decade for that to happen because they lost control and the gold and silver markets ran. But after that, that's when you started the parabola here in the hypervaluation of debt. This is the financial, this period from 81 to 2020 is the hypervaluation of the financialization of everything, where you borrow money for all forms of consumerism. Everything is worth putting leveraging in, homes, cars, you name it. This is the great borrowing binge. Everybody
The
thinks
the
that's a normality.
financialization of the economy.
100%. They're in leverage and the indebtedness. And during this period, obviously, that debt had to hold value and even sustain value. And of course, we went into a cycle of ever lowering interest rates because we globalized the workshop in outside of America manufacturing, outside of Europe manufacturing, and we got that double benefit that the Greenspan called the Goldilocks economy, which was there was no inflation around, even though you were getting asset price inflation, which is already the beginning of inflation. He said there's no meaning CPI because everything was getting this once-off globalized benefit of workshopping everything into the lowest common denominator of cost,
Right.
Thailand, China, etc.,
Yeah.
etc.
Labor.
And then you gave up that gift by running the interest too low, and you allowed for this boom, feel good, mass affluence era. Now we are due the anti-mass affluent era, where everything that is leveraged needs to deflate. And the biggest aspects of that is the debt itself and the currencies. So I refer to this football bladder that is deflating of all the currencies and their associated debt. And they're kind of like seesaws. So I even had one of my guys do a diagram for me on that. I'm not sure I still have it up. But essentially, the American seesaw, the thin guy is above water and is the currency, and dollar is being relatively dominant. But the fat guy's on the debt side, and he's taking the bath at the moment. Japan is the exact opposite. They've maintained their debt valuations through intervention. None of these are true markets on either of the seesaws, but the yen is taking the caning and is under the water. So you need to almost visualize these things as fish bowls with ever increasing water levels and a seesaw in it. And you've got one guy drowning and the other guy just keeping his head above water. And the problem is the water level is still climbing, and your ability to
It's overflowing the bowl now, isn't it?
basically, yes, we're getting to that juncture. So the debt market has taken a gap. So the only thing I'm interested in shorting is things like that are in the deflating pool: American debt, TLT, and Japanese currency, because those are the two weak sides. They've decided those are of the two valves they're going to allow the pressure to release from. Japan has taken the beating on the currency, and America's taking it on their debt valuations. So you want to be short TLT and you want to be short the yen. But why do it against another currency that is in the deflating pool? Your real trade has been gold Japanese yen and could pivot to silver Japanese yen in this silver bull market if it's going to start its overperformance, which we think could be at the point of commencement. So you don't have to choose a long from the idiot pool. That is the end of the financial realm. So that is physical stuff. This is why we're seeing coffee beans going up. You've mentioned watch the grains, Francis, and I'm going to have to start checking the wheat out that you've mentioned. Last time they weren't looking overly interested, but it was a long time ago. But softs are moving. Physical things are going up. In valuation terms, only those with financial engineering will not go up. So expensive homes where everybody has a 95% mortgage, those districts, those prices will stay under the cost for a long time until BlackRock or somebody else has come and hoovered them up and turned everyone into tenants in their own home.
Well,
But
they did that in '08. Let me ask you this. What do you think about this statement, which speaks to stagflation, that we're going to have deflation outside of gold and silver in things that we own, which would be stocks, real estate mainly, and inflation with things that we use, which is the commodity complex. Is that what you think is going to happen? We could have deflation of assets and bull markets and commodities simultaneously.
so when you say assets, if there's no financial leverage in them, let's say good productive farming land and there's not big mortgages on them, those things are going to become very useful because of the commodity aspect that you've already
Okay.
highlighted. They're going to
Okay.
be yield generating, foodstuffs that people need, etc., etc. So you could have a situation where certain property where there's not an existent amount of excessive leverage. Because of the hyper leverage in certain assets, those things will disinflate. And don't forget, margin trading in stocks, that's part of a leverage system. However, because of the rate of contraction in debt and fiat, it's happening now. We're realizing it now. This is the punctured football deflating. The 40-year inflation of the debt market, it's not going to be 40 on the way down. It's 4. It's
Yeah.
elevated down,
Down
escalated
is
up.
faster. Yeah.
Yeah,
down as
much faster.
fast.
So what that actually means, that is going down super fast. So everything will go up. I even think it's possible for the stock market to continue to go
Okay.
up on the basis that it generates earning yields in future dollars. And as prices go up, it has an inherent inflationary protective factor because your dividends will go up because the cost of burgers will be going up or because of, whatever item. However, anything that's hypersensitive to consumer or retail purchasing is going to do disproportionately badly because we are sitting in this two-tier world economy. I twist the balloon, the guy who makes the dog for your kids
Yes.
with a balloon, the clown guy. And I'm
Yeah.
saying there's two economies right now. You have the
Right.
surveillance finance, tech complex, the military industrial complex, the pharmaceutical media, etc., those doing passport control, biometrics at borders so that they know where everybody is. Those guys are doing gangbuster great. The average man in the street who doesn't work for a statist industry such as military, Boeing, Lockheed Martin, they are doing less well. They're already on a two-income family. They're already battling. They're already rotating massive credit cards. The average rate being paid is over 21% by Americans on over $1 trillion in credit card debt. People only tend to use the expensive debt when they really, really have to. They rather take a
Yeah.
personal loan, extend their home mortgage. Once they've already done that, they start going for that. I've got to do this. I've just got to hope something good comes further down the lane. That points to distress. So consumer and retail staples will actually underperform because the other half of the balloon that relies on the man on the street isn't doing well.
Okay. Don't you think though that we could have, the stock market peak here in the next few months and undergo a very severe recession, a pullback like to 3,500 or 3,000, and then the Fed comes out all guns blazing, and that's how you get your targets in silver over $100.
I'm not aggressively long in the stock market myself. I just point out that overall, when you have a sustained period of stagflationary, even industries that make no sense go up in value, mainly because the benchmark that you're measuring in. And I actually expect that we're going to have some form of demand destroying event. And I think, especially where the stocks are hypervalued, you could have a violent potential correction. But there's been a lot of people that get angry for saying that. You could have been saying that since
Yeah.
March 2020, and actually the market's traded substantially up. And it
Right.
can have that crash, but it will probably recover on the basis of the fact that everything we're measuring in. So my main message is stop measuring your wealth in dollars. Start measuring it
Got
in
it.
gold and silver ounces. Such is the dollar has become part of the story. And it's not just the dollar, it's all fiat and the contracting debt football. So all of these things are contracting. And what that actually means is you're going to get paid more nominally, but you're actually going to be poorer
Right.
because of the net overall effect of everything. This is the stag part of the inflation. We're going to stagnate at the retail consumer level. And your overall living standards are going down. This is the inverse Goldilocks I was referring to that Greenspan said there was no consequence for, and we've just got this economic miracle where you got the outsourcing globally. You had all those things all at a time where you were financially engineering everything and things went from relatively under leveraged to hyper leveraged. Now you've got to unwind that whole 40 years. And it's mainly dark side because we ate all the cakes. We didn't eat the veggies and the salad and all of that. We went straight to the good bit. We bought next week, but took the item today. All of that sort of stuff. Buy now, pay later. That's the
Yeah.
40 years we've
That's
had. Now it's
right.
pay now and
Yeah.
wait to buy later once you've got back. So it kind of is that inverse environment. However, those that position in, and I love generally the commodities. I would say I would put the energies again at the lower end because of the consumer element of it. If we all stop traveling, we drive less, we go on holiday less, the energies will lag. The monetary commodities, gold and silver, are our lead steers, which is why you mentioned I seem to be all over gold and silver, because this is where I want people to spend their time. And coffees, some of the softs, the select parts of the softs that have been very, very suppressed for an extended period. Aggressive buyers from Starbucks, a lot of other things going on, dollar devaluation, all of these things. And now these people demanding a better wage, better crops, better whatever. So those
Okay.
aspects are the areas where I'd like to see people playing, and they've served us exceedingly well this year so far. So it's a commodity bull market, and in time, your miners. In fact, some are already shifting, and I do have
Oh, they
one.
are. EKX, Endeavor, and Fortuna have more than doubled from the March low, which is a call I got right. I didn't sit with them long enough. That's always my issue. But I think that if we had any kind of sell off, you have to be long miners. Can you tell me why the big miners are not participating like some of the juniors? Like, for example, I looked at Barrick today, and Barrick never broke out. Newmont's had a rally, but it was 80. Um, can you explain why money is gravitating to cheaper miners that are under five that the institutions really can't buy?
So I haven't studied it, and I won't be able to give a fundamental answer, but I can give a general opinion. When you're a marginal miner, the upside is far higher. Big miners tend to have very secure capital bases,
And
very secure
hedges?
cost bases, and inherent margins. And
Okay.
sometimes metal moves actually just adds a little bit more in percentage terms. If you're a marginal miner and you're barely profitable and suddenly the price moves $200, you go from being $50 profitable to $250 profitable, you actually get
Okay.
leverage to your relative profitability quite extensively. So the speculators are recognizing those that were marginal, and marginal moves more, especially if they're
Okay.
going to go from break-even mines to barely profitable to suddenly now getting 4 or 5 times more
Yeah. They're
because they're
printing money
Yes,
right
in
now.
essence. That well,
Yeah.
they've been struggling for a very, very long time, and most people are treating them like businesses that are barely delivering a return on capital, and they suddenly go to having 5x margins. I mean,
Yeah.
imagine Apple suddenly made 5 times more money an iPhone and a Macintosh computer, what their share price would be. Or Nvidia suddenly, managed to get their chips made for 20% of what they used to be, and their margins went up 5 times. Imagine then what we'd be looking at. Well, it's kind of like you're getting that effect. And because people are starting to anticipate that these are not just Phillips, there were certain people that used to talk about, oh, here comes silver's annual pilgrimage to the $25 mark. And I was saying, no, this is time. It is actually different. Those kind of people think, well, I'll just short it at 25 silver or a minor. And now, once it starts to hold consistently for longer duration, the mood changes from, okay, they're just going to get a minor once off Phillip that's going to quickly be taken back to, hey, this is going to be sustained at this level. And in fact, may even build on it even further going beyond that. Then everybody starts adjusting their Excel spreadsheets and their outlook for the miners far more favorably. And that starts with, I think sometimes it starts with the smaller guys, because the stable miners are the big guys generally that have got good balance sheets, but aren't particularly leveraged to the gold price. So that's why they don't do as badly in the bear markets, but they probably don't have the gearing for the upside. What tends to start to happen is they will start gobbling up
Yes.
the
Takeovers.
underground ounces because they can see those PEs starting to stretch, but they have a much higher PE because they've got big senior management, very corporate, been stable for a long, long time. They
They
might
put
have
on
a
hedges too. Maybe they didn't capitalize on
sold
this
forward.
move in gold
Yeah.
because they were hedged.
That's the other point I was going to make. The bigger guys are make a much bigger book of we are so stable and we don't take risk on, and we reduce
Yeah.
the risk that all these small miners do, and we've sold X tons forward. So they're not getting any of the benefit of the higher price until a year from now, given that things are only really getting going again now.
Okay. Well, Francis, gosh, I mean, we've covered a lot of ground. I have to ask you, and I know we can't pull up a chart on this, but I'm here in the US and I know the condition of the country, completely divided and angry. So from outside of the US, and I know you're like an international man, you're all over the place. What is your view and what do you think is going to happen in November when neither side accepts an outcome of the election?
Yes, I think well, first of all, it'll be imposed on them. Let's hope it's a fair one this time and that you don't get number counting anomalies. There certainly was some cause for concern that I think had some basis in real fact rather than, as they like to say, conspiracy theory. I hope you get an honest one, first of all. And I think, unfortunately, on the trajectory, the Western financial system. Let me make a financial point, which is more my expertise rather than a political one. It's
Okay.
kind of you're in a beautiful, though the US is a great and beautiful country and I love the people. You've been in a business class airline, you guys, compared to the rest of the world and Europe and some of the others compared to the working. But this airline is hell bent to fly into a mountain. And you can change pilot who happens to be at the control for when you hit the mountain, but I don't think it deals with the mathematical certainty of the debt unwind and the loss of empire, the downdraft you get. Britain knew all about it. They had
Yes.
3 decades of austerity. And I fear for American citizens that the buy on credit, credit extension, once we've washed this great debt expend, you're not going to have the same lifestyle that you've had before. And I fear that extends also to Europe, Canada, the Commonwealth, Australia, New Zealand, the English Anglo-Saxon nations almost to a T. I do feel we're getting a downgrade. We're going to be brought down to everybody else's level to a degree. And the best way you can prepare for that is to have optionality. That means multiple residencies, places to stay, and also to protect against the financial aspect. You might not want to leave America. You might not want to consider even having a passport of a different nation, but certainly you've got to do the balance sheet protection, which is going to be, I see precious metals playing such a fundamental role in it.
Yes.
I see
Yes.
productive land and a few other assets that generally will hold you in good stead, and being self-reliant on food, water, and energy as much as is humanly possible. So, I mean, I'm in a property that I'm going to be refurbing that I purchased, and I've just put it, I'm going full solar. It's a capital
Okay.
investment. It's part and parcel. I don't
You're
rely on.
pulling you're pulling a David Brady on us.
Yeah, 100%. I'm going independent. I
Okay.
like to be master of my own destiny as much as humanly possible. And unfortunately, real liberty seems to be going deeply out of fashion. Even if Trump gets in, he speaks a language of real liberty, but unfortunately, in terms of what happened with the events of March 2020 and that medical experimentation, he went along with the game. But is he less distasteful than Biden for me? Yes, he is. But is it my place to tell an American how to vote? No. And do I think it's going to affect a great deal? I don't really,
It doesn't
unfortunately.
matter who the captain is of the airline.
100%. It's
One
just the
may
name
hit
for
the
the
left
gravestone.
side of one would hit the left side of the mountain and the other one would hit the right side of the mountain.
It literally is the name on the gravestone, isn't it?
All right. Should we be worried about bail-ins here in the US?
100%. Counterparty risk is going to go hand in hand with this deflation of the debt bull. If you've got China actually divesting from USD treasury bills because they're afraid they might get the Russian treatment, and you're segmenting the financial system. It's no longer agnostic. It's now got a moral taste to it, where people make judgments on who's the recipient of funds and money and assets. You've got to recognize that it's already begun because one nation state has done it to another. And it's only time before the collateral damage of that turns into your own banks doing it to you. So I would run lean on fiat in banks. I would keep cash and I would be strong on metals and self-reliance.
Francis Hunt, who makes decisions with patience. And if you ever need a spotter, let me know.
I'd
Every
be honored to have you, Dale. Honored to
any
have you as a
every
spotter.
sniper needs a good spotter. And I tell you what, Francis, a great conversation. I think that people need to take what you say to heart and to wallet, and really appreciate your insights. I think that you're one of the more experienced, thoughtful voices in the financial world.
Thank you so much. It means a lot coming from you. And remember, go and live and enjoy life in spite of everything. You were born to cope with these times. You're born because you're strong enough. See it as a challenge, reduce it to game theory, live, love, and jump. If it means you get the best of whatever years you have left, you've lived a great life. It's not how many shekels you have in your bank
Yeah,
account when you get buried that matters in terms of a fullness of a life lived. You just don't want to have to rely
exactly.
on other people for food, warmth, and shelter. And, much more than that, we don't need but a bit of love and great times.
Yes. Trading is what we do, not who we are.
Love it.
All right. So Francis Hunt, everyone, follow Francis on X at the Market Sniper and go to Francis's website, www.themarketsniper.com. Is that correct?
It is.
Okay, and check Francis out. You've only heard the tip of the iceberg. And going into these times, the fourth turning, whatever turning you want to call it, I'm already dizzy. Uh, keep Francis and his thoughts in your narratives. And that's a wrap. Thank you again, my trading warrior brother. Francis Hunt,
Thank you, Dan.
everybody. Adios.